Hello, good afternoon, and welcome to this FinGraphs podcast on Dukascopy TV. Today we're going to talk about Bitcoin, which has seen a huge rally over the last few weeks, and we wonder if it shouldn't be taking a breather over the next following weeks. We'll first look at a cross-assets mosaic with various assets, including Bitcoin. So we have Bitcoin, the mini S&P future, Euro, US dollar, and gold on a daily basis, so the perspective over the next few months. And we have the same assets on an hourly basis for the perspective over the next few weeks. What we could see is that since March, most of these assets have benefited from strong reflationary efforts by central banks. And we indeed saw Bitcoin, the S&P, the Euro dollar, and gold perform quite strong rallies, at least into August and early September. What we can see is that since then, most other assets have started to consolidate at high levels. We can see here on the S&P 500, we've had the consolidation in September, another dip here in October, a retest up. We believe that it does seem that we could still see some kind of a retest down over the next few weeks. Similarly, on the euro, we've been working through a range here. The corrective targets here indicate that it may not be quite over yet. Gold has been consolidating, maybe with less of upside dynamic, but is also for now just a consolidation and with a strong support around 1800. On the other hand, Bitcoin has plowed ahead and has made a very strong rally over the last few weeks, reaching our impulsive targets to the upside. If we now look at the hourly perspective, we can see that Bitcoin is also up into our impulsive 2 targets, so quite an extended move. The mini S&P future has seen a very nice rebound since November. The euro also. Gold is a bit of a more difficult story given the steepening trend at the moment. But in general, we could still see that the resilience of Bitcoin has been much stronger than other assets which are helped by monetary reflation. In general, that leads us to think that the consolidation on these assets here should continue another few weeks and may trigger some kind of a counter trend on Bitcoin. If we look at the graphs now, this is the investor's view of Bitcoin with a weekly graph for the perspective over the next few quarters, a daily graph for the perspective over the next few weeks, and an hourly graph for the perspective over the next few days. The risk index is still quite low on a long-term basis, and we have broken out above 2019 highs, and we could probably be challenging the 2017 ones over the next few quarters. We believe that this was some kind of a base building, long-term consolidation, and that it will eventually end with a strong upside breakout. That said, price is slowly getting to our envelopes, and our envelopes are slowly touching each other. And we can see this exaggeration here on the daily, where we have reached the targets, and our envelopes are seeing quite a lot of stress, and our risk index is now overbought. Similarly, on our hourly graph, we are in impulsive 2 territory now, which is our more extended targets. You could still make it up slightly higher, but also here we do expect some stress to be seen on our risk index. So our view on Bitcoin is that we could see some retracement over the next few weeks, probably into late November, early December. Downside targets on the hourly are pointing towards corrective targets, probably around the envelope here, around 14,000, sorry. On the daily graph, we could probably come back to the range we saw in August here, around 1250, 13,000. And then on the weekly, we probably think the highs of 2019 may also offer interesting support. So a bit of a retracement, but still a very, very strong view into next spring. Thank you very much and have a good week.